Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is July 14th, 2025. I am Luna.
I am JP Morgan.
Well, a pretty fascinating week. We saw major indices like the S&P 500 and the Dow kind of slip back a bit from those record highs. But there was also this surprising resilience, almost a weird calm, despite some, frankly, huge headlines.
Right. So our mission for you today is really to cut through all that noise. We want to pull out the really crucial insights from this, let's call it, cautious risk-off feeling. Help you understand what forces are actually at play here and, give you the key takeaways without just drowning you in data.
Okay, sounds good. Let's unpack it then. The week ended cautiously, S&P, Dow edging lower, like we said, but digging a bit deeper beneath those pretty modest drops, your sources highlighted something really counterintuitive, didn't they?
Oh, absolutely. While the usual stuff, traditional assets, saw these slight dips. Here's where it gets interesting. Bitcoin, it just surged. Hit a new all-time high, just shy of $120,000. Mm-hmm. And this huge crypto rally kind of unfolded without a massive amount of mainstream fanfare, almost like a quiet revolution happening, which, suggests a pretty unique split in market sentiment. Wow. So, okay, crypto's flying high. What about the more traditional safe havens? Are people piling in there too, or is it a different story? Well, that's the contrast, isn't it? Unlike Bitcoin surge, we saw pretty steady treasury yields. The 10-year U.S. Treasury was hovering around, 4.41%, which kind of points to this delicate balance, right, between wanting safety but also worrying about inflation underneath it all. Gold prices, they were pretty much unchanged, around $3,360 an ounce. And oil, it ticked up just a tiny bit, near $68.50 a barrel, mostly on geopolitical whispers. So the market's juggling very different signals.
Right. And the biggest headline, definitely the one driving sentiment according to your sources, President Trump's announcement. These sweeping new 30% tariffs on imports from the EU and Mexico kicking in August 1st. I mean, given how big that sounds, why was the market reaction so, limited, almost muted?
That really is the million-dollar question, isn't it?
Yeah.
The sources strongly suggest many investors think this is a classic negotiating tactic. The escalate to de-escalate playbook, start extreme to anchor the whole conversation lower.
Okay, that makes sense.
And the EU, while they were critical, of course, they've held off on a immediate retaliation. They're looking for common ground. That kind of lends weight to the idea that it might be, a high-stakes bluff that the market is sort of betting on for now.
A bluff, yeah. But speaking of tariffs, your sources also picked up on another one. Less expected, maybe, but it had a much more immediate, much more dramatic impact, right? Tell us about copper.
Indeed, that was different. A sudden 50% tariff slapped on all imported copper. And Dr. Copper, as they call it, because it's seen as a gauge of economic health.
Right.
Its price just soared. Over 13% in a single day, hitting an all-time record high. Now, this is significant. It poses a very real risk of pushing inflation higher and definitely increasing costs for U.S. manufacturers. They rely heavily on imported copper.
Yeah, 13%.
This wasn't seen as a bluff. This moved markets instantly.
Okay, so tariffs creating waves. And then, just when you thought the week couldn't get any weirder, the Federal Reserve Board holds a rare, unscheduled, closed meeting under confidential procedures. I mean, that immediately sets off alarm bells, doesn't it? What were the sources digging into there, especially with all the noise around Chair Powell?
Oh, absolutely. When the Fed meets like that, behind closed doors, unscheduled, it signals something pretty significant might be happening, particularly when you layer on the, let's be frank, very public pressure from the White House directed at Jerome Powell.
Yeah.
Sources specifically mentioned top aides looking closely at a $700 million renovation cost overrun at the Fed, possibly digging for grounds to fire him for cause.
700 million. Wow, that's a number designed to make headlines, definitely. So this isn't just about interest rates anymore, is it? It feels like a direct political challenge to the Fed's independence. Yet Powell himself has kept this quite patient tone through it all.
He really has.
Yeah.
He keeps defending the Fed's independence, pushing back against calls for immediate rate cuts. It strongly suggests the Fed is deep in contingency planning mode, maybe discussing regulatory relief, potential bond market issues, getting their ducks in a row. But they're definitely not signaling they'll rush into drastic moves just because of the pressure.
Okay, so looking ahead then, what's next for you, our listener? What are the key dates, the reports we should all be watching?
Well, the next few weeks are definitely pivotal. That August 1st tariff deadline is obviously huge. Keep an eye on that. Plus, we've got upcoming economic data, the Consumer Price Index, for one. And second quarter earnings reports from major companies will start rolling in too.
And why should you care about those reports specifically?
Well, they'll be the first real signs of whether these tariffs are actually squeezing companies' profit margins, or maybe more directly relevant for you, if they're feeding into higher prices for the stuff you buy every day. Could be everything from appliances to cars.
Right, the pass-through effect. Okay.
So tying it all together, what's the outlook for your portfolio, maybe?
Yeah.
It's really one of cautious watchfulness right now.
Hmm.
I mean, the long-term bull market isn't necessarily over, but these daily headlines, they're absolutely cranking up the volatility dial.
Yeah, definitely feels that way. So for you listening, probably smart to stay vigilant, stay diversified, maybe think about things like gold or some defensive stocks just to add a bit of ballast. And maybe try not to overreact to every single tweet or headline, but understand the currents underneath.
Exactly. This deep dive really shows a complex picture, doesn't it? Poised between potential de-escalation on trade and maybe looming clashes. The next few weeks, expect a lot of noise. Probably markets trading in a very news-driven back-and-forth kind of pattern until we get past that August deadline.
So for you, the big question hanging out there is, was this latest market wobble just, another flirtation with a trade crisis that gets walked back? Or was it actually the quiet start of something with a bit more bite? Something definitely for you to chew on as you watch how things unfold. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.